Kitco Mining, special coverage of the National Bank of Canada Capital Markets CEO Mining Conference, is brought to you by Agnico Eagle.
Kinross is blazing a trail. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 NBC Mining CEO Conference in London, England. Joining me today is Kinross CEO Paul Rollinson. Paul, welcome back to Kitco.
Thank you for having me.
2025 is turning out to be a very, very solid year for Kinross. You recently reported your third quarter results, another solid quarter there, 500,000 ounces of gold equivalent production. Saw your cash and equivalents pile grow to more than $1.7 billion US. You're paying down debt and you've increased your dividend. Paul, a very successful year. What has been particularly pleasing for you?
Well, look, I think it's just a continuation of the third quarter from the second quarter, first quarter. We've had a very rigorous focus on costs. You know, for us, it's all about meeting our guidance, and we've got a long track record of doing what we say we do. Number one, hit your numbers on production. That takes you a long way to hitting your numbers on costs. And if you do that, which we have done, it flows naturally into margin and cash flow. So Q2 was a record cash flow quarter, as was Q3, almost $700 million in free cash. We became net cash on the balance sheet back in September. So with that momentum of cash flow and strength of balance sheet, that's where we decided to enhance the return of capital. We decided to take our buyback up by an incremental $100 million for 2025. We've enhanced our dividend on a go-forward basis, increased the dividend by 17%. And we also made the announcement that we'd be redeeming our 2027 $500 million of notes. So very strong quarter. Operational focus has led to cash flow, and that's really our MO.
Now, with the fourth quarter looking stronger than the third quarter in terms of the gold price and all that that brings, will we see these things continue? As you mentioned, you increased your dividend from 3 cents to 3.5 cents. You advanced, paid back some of your debt. You're building cash. What are you planning to do as the cash pile grows ever higher?
Yeah, it's a good question. Look, I think we've had a very simple and transparent message around capital allocation for many years. And again, we stick to our knitting. There's really three points or three questions. For us, number one is what are the needs of the business? And again, we have a very technically centric culture. That's always a check for us because a well-maintained business is a low-risk business. So we'll, keep our business well-maintained. And I'll come back to that point. The second question is, what are the needs of the balance sheet? Well, our balance sheet is in great shape. As I said, we're net cash. We're growing the strength of our balance sheet. So we've got a check there. And then the third consideration is shareholders and return of capital. And what we've managed to do in 2025 is balance all three. When you look at the total returns to, say, I would call it the owners of the company, that's about $1.5 billion between debt reduction and return of capital. And that's about 50% of what our free cash flow has been. So I expect if this gold price continues, more of the same.
Okay. Now, investors, I imagine, like an increased dividend. They like an increase in buyback. But when you speak to investors, what is it they actually want? What do they actually tell you or message to you? They say, okay, for us, the priority is buybacks, it's dividends, it's growth.
Yeah, it's a good question. Part of it goes to jurisdiction. We are our largest constituent of shareholders is in the U.S. That's over half of our shareholders. Again, I would say there's a stronger preference for buybacks in that jurisdiction than in some others. We don't believe we trade on yield. I think a dividend is important and that you have the discipline to pay the dividend. And our dividends are meant to be the forever commitment. So once you make that commitment, you should expect us to continue to pay that for the foreseeable future. With buybacks, and we still see intrinsic value in our share price, particularly when we look at what our NAV is at spot, we can be more flexible. We can increase, we can step into it more as we just did. And for us, what we like about the buyback is it's a quantitative assessment. We are reducing our share count over time, and all things being equal, with a reduced share count, we expect improved per share metrics. And with improved per share metrics, like better cash flow per share due to lower shares out, we expect, the market will support that.
If these high gold prices continue and the performance of the business continues, the margin continues to be very strong, does your thinking change? Because you mentioned you're already net cash positive. That debt is going to get paid down. You buy back your stock, your shares outstanding shrink. So does that enable you to potentially think of a different returns policy, perhaps as, for example, a percentage of free cash flow? So it's a variable dividend because you've got the business into such a robust position.
Yeah, again, it's a good question. We don't want to necessarily be tagged with a formula. I think what's important is if you look in the rearview mirror, we've done what we said we would do, and we've stepped up without being asked to, as we did on this recent third quarter. So, as I look forward, in a sense, we want to be kind of lagging the market from a position of strength, meaning if gold price continues and cash flows continue, with that strength, we will continue to do what we've been doing in terms of returns. The other thing with this gold price that's interesting is we have a lot of optionality in our portfolio. We have about 22 million ounces of proven and probable. That's a fully costed, almost equivalent to an all-in sustaining cost definition. You'll know that the regulators, to call something a reserve, only require $1 of operating profit. That's not how we do it. We fully cost our reserves. So 22 million in 2P. But incremental to that, we have another 26 million of M&I. And incremental again to the 26, we have another 13 million of inferred. So that means we have a ton of optionality in our portfolio. We're not rushing to use the spot price, but at higher prices, lots of things, turn into better IRRs. So I guess long answer to the point, but we see more opportunity to reinvest in our business with some of these less developed projects in our resource base.
Well, let's talk a little bit more about some of those opportunities, Paul. Kinross continues to invest in Round Mountain, for example, in Bald Mountain, your mines in Nevada.
Yep.
And that's a state that continues to be one of the jewels in the gold sector. We recently saw Barrick Mining put out a PEA in 4 Mile, which is showing that that's going to be a long life beast of an operation. AngloGold Ashanti's Arthur Complex in the south of the state also is going to be looking like it's going to be a multi-decade gold mine as well. How do you see the competitive environment in Nevada evolving?
Yeah, it's a good question. Nevada is a competitive market. We used to get the inflation question coming out of COVID. We had that hyperinflation that sort of hit the world, and we would say, yes, we feel inflation all over the planet, but we probably feel it the most in Nevada. And it's to your point, there's competition for everything. There's competition for people, consumables, it's a hot market. There's lots of movement, but we've got good miners, good skilled miners, and we're managing it. We've got a great culture. We actually attract a lot of people in Nevada. So it's a great place to operate. It's a core jurisdiction for us. I expect, with all the activity in Nevada, there'll still be competition for good people and everything that we require in our process.
You continue to invest in your operations in Nevada. What are your plans for Nevada going forward? What do you want your operations or your operational base in Nevada to look like going forward?
Sure. We have 2 mines. Obviously, Round Mountain, which we're getting to the end. By the end of this decade, we'll be done in the open pit. the transition is what we call Phase X to underground. We've actually got about 5 kilometers now of underground development, tunneling, drilling, resource modeling, looking really good. So we'd be transitioning from a sub 1 gram open pit into something in the 3 to 4 gram bulk underground. We're pretty excited about that. Our plan is to put out a study with economics in Q1 on Phase X. At Bald Mountain, our second operation in Nevada, a little different. Instead of one big open pit, we've got a lot of small pits. So it's a situation where you're mining, you're cash flowing, and while you're doing that, you're looking at the next one, permit, development, and we move from pit to pit. So last year we put a green light on something called Redbird. This year we're looking at Redbird 2 plus some satellites. And again, the gold price we're in right now, those are quick, get in, get your payback, get on to the next one. So in Nevada specifically, we're looking at extensions at both Bald and Round, and there'll be an update on both of those in Q1.
Okay, well, let's switch our focus to Canada, where the mining sector looks like it's going to really benefit from federal government policy that is adapting to the challenging environment with the United States. Canadian Premier Mark Carney is advocating for accelerated permitting times and other things, other infrastructure developments as well. What potential direct impacts do you see, positive impacts for Kinross, for example, for your Great Bear development project?
Yeah, it's a good point. The government, both provincially and federally, are saying all the right things. Time will tell as we get into it. We're still in the advanced exploration stage, meaning we're trying to put a decline down to get underground to drill more cost effectively than from surface. That's the main focus right now for Great Bear. In parallel, we're finalizing what we call the impact assessment, and that's a federal process. So we've broken it into 3 filings. We did one in September. We'll be doing another one before year end, and we'll be doing our third and final impact assessment filing again in Q1. That's where we'll see. I'm hoping that the process in Ottawa federally will be there. And look, Great Bear is shovel ready. If we had a permit, we'd build it tomorrow.
Well, given all the positive noises coming out of the Prime Minister, do you see the possibility of being able to shrink the time to get that into production?
Oh, if there was a way, we'd love to do it. We're ready to go. It's immediate jobs, taxes. It's 15 minutes from the Tim Hortons in Red Lake, which is a mining town off a paved highway. It's just a great location, and it's ready to go. But we've got to do the right thing and follow the process. And we don't want to, we want to do a very thorough impact assessment. And our hope is that by doing that, that will give us an accelerated review and hopefully get a permit sooner.
Okay. Well, let's move down our focus to Chile, to the Maricunga district. Hochschild Mining will soon complete the spin out of its 11 million ounce Vulcan project into Chernin Gold. You've been working on La Coipa. You've also got the Lobo Marti development project there. And also Mineros recently consolidated the full ownership of the Los Pepas project, paying $40 million for the 80% stake formerly held by Pan American Silver. The Maricunga district seems to be getting a second wind or second life. Why do you think that is?
There's a lot of gold down there. There's a ton of inventory resource. I mean, the real challenge in Chile, Chile's, when you talk about your Chile strategy, what you really need is a water strategy. And our strategy evolves around what we currently have, which is our base case, which is existing permitted wells that are pumping every day. So our plan is to have a linear transition from La Coipa over to Lobo using the same water. And the reason that's a pretty good base case is because we've been pumping for many years, we also have hydrology. So it's not a theory. We know that when we draw, there's no detrimental impact to the groundwater source. So, our plan is to mine La Coipa, then move over to Lobo. If we had more water, we'd keep going with both. There may be opportunities to do that, but our base case is work with what we know we have today. The reason we're transitioning over to Lobo is it's higher grade. I always joke it's not as great as Great Bear, but this is going to be a great mine, sort of $1,000 AISC, 300,000 to 400,000 ounces a year. It's a relatively high grade heap leach with a low strip. So great economics, and that will take us well into the 40s. Again, with more water, we could do more. We'll look at that. But right now, base case, La Coipa to Lobo.
Well, I think that's perhaps a tantalizing proposition, because with the other activity that's starting to increase in the Maricunga district, that potentially, I would assume, opens up the possibilities of shared infrastructure development. I know there's third-party water providers getting into or getting more active in, or utilities getting more active in Chile, not too far away from there. So there potentially could be other water sources becoming available in the near future.
Absolutely. And, these things evolve over time. I use the example at Tasiast. We've been in the Sahara Desert for 15 years. We thought about solar 15 years ago, but the economics didn't work. The cost and the capital and the technology. And it was only a few years ago, the cost of the technology and the quality of the technology, the lines turned positive. So we put, $55 million into a 34 megawatt solar plant with a positive IRR based on a $70 oil price. It's about the same with desal. Over time, more service providers, more technology, more offtake. To me, desal is like electrons. It's just really another form of infrastructure. So if we can get, as we say, desal up the hill, because we're all operating up 3,000 meters, 3,500 meters, I think it'll light up the Maricunga. If there's more water, there'll be more gold production coming out of, we call it Region 3 in the Atacama.
Now, if my geography serves me, if I remember correctly, the road up from the coast pretty much goes to La Coipa, and then that would potentially be a natural staging post for infrastructure such as that, which could then branch off to serve different operators. Yeah,
we'd be open to all of the above. If it makes economic sense, pooling, sharing. We have lots of ounces in Chile. Right now, we're just thinking about what permitted wells we have. But that's why I say that's our base case, but there's definitely upside if there's more water in the region.
Okay. Well, we're coming to the end of 2025, so let's look ahead to next year. What are the goals for 2026? Where do you want to get the company to? If we sit down at this time next year, what do you want Kinross to look like? What do you want the balance sheet to look like?
Yeah, it's maybe it's boring, but it's more of the same. It starts with operational focus, just like I was saying for 25. Keep a keen eye on your operations, which will lead to your production. With your production comes your costs, and with the costs come the cash flow. So that's steady as she goes. In addition to that, though, let's say that plate is spinning operationally, cash flow. It's all about moving the development pipeline. So back to Phase X, Redbird. We've got this thing in Washington State called Curlew. I call those the brownfield developments. And then beyond that, Great Bear, Lobo, Marte. So look for catalysts like the studies we're going to do on Phase X, on Curlew and Redbird. Look for permit advancements on the more greenfield projects like Great Bear and Lobo. And as it relates to cash flow and return of capital, we'll find the balance. And if the cash flow is there and the business is well maintained, which it will be, we'll probably see our balance sheet continue to get stronger while we continue to return capital to shareholders.
Okay, well, I don't think great performance is ever boring, Paul. Paul Rollinson, thank you very much for joining us today.
Thank you for having me.
And we have a lot more to come from the NBC 2025 Mining CEO Conference here in London. So stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining, special coverage of the National Bank of Canada Capital Markets CEO Mining Conference, is brought to you by Agnico Eagle.